Hello traders, Chris Bus here with Traders Profit Compass with a review of the Sector Spider ETF weekly charts for Monday, June 13th, coming up on 7:50 a.m. as I'm starting the video. What I'm going to do is go over the top sectors, the weekly charts of the top sectors. I think that'll give us some really good levels to monitor and trade against going forward. So starting out with materials, you can see on materials, one of the stronger sectors in the market, still in a well-defined consolidation range. We had a couple of fake breakouts. This one resulted in a move to the bottom of the range, as did this one. Most recently, we went to the top of the range here at 87.5. I think the level to watch is going to be 77.5. That would represent a break of the consolidation range, and the width of that range is $10. So on a break of 77.50, my first target would be 67.50, $10 measured move, and then roughly 59-ish would be my second target. And the thing I want to point out here is if this market goes full on recession, bear, massive downside type of a move, keep in mind that there's still going to be a ton of opportunity out there on the downside. This thing has not even broken down yet, and you notice a more or less a big void in the chart where if things start moving to the downside, I mean, we know downsides happen a lot quicker than a grinding higher type of a market. So on this break of 77.5, that'll clue you in on one of the top sectors breaking down. And so I would definitely have that level alarmed. Communications. This is what is it? Meta and Google, about 44% of the market. I'd be keying in on this 57 level or 56.50 level. That was the prior low where we spent. We actually had 4 weeks worth of tags. You can see it back here. Tag, 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 support, support, support. And then it stopped on a dime on Friday right at that level. On a break of 56.5, I see 52 as a first target, and then the bottom of this value range down at 46 as a second target. And a thing I want to make note of, right now, we're at the pre-pandemic highs at 56.50. So a complete round trip for this particular sector. And once you break that level, 56.5, then you're back into an old trading range. You can see here lows down at the 46 level up to this 56.50 level. So while there is an intermediate target down here at 52, I would assume that if this thing starts rolling downhill, that it would make this 46 target down at the bottom of this value range. And you can see previously we had an A, B, C move, and that measured out perfectly. So if I take that same length at the top of this bear flag to the bottom here and measured that move out, you're going to be down here in the $50 range, and most likely would just keep going, fall into support down towards 46. Energy, one of the top performing, well, the top performing sector. You can see that we had a channel low back here, and we came up, got through the midpoint, came up to the top of the range of the channel, came back to the midpoint, and just last week touched the top of the channel once again. So the thing here is, we know there's a hugely bullish backdrop to energy and oil, but still there's stocks. So we may see, if things go bad, a first pullback target would be back here at 80, 81 at the midpoint of the channel. And if that were to break, come on back to 72.5, and then that would be a really nice objective place to try for a long. So I would be looking for 80 and then 73, right in that area. And I forgot to mention at the top of the video, I think the right speed is 1.5x, 1.5x on your player. So feel free to advance the speed at any time if you're new to the channel. Financials. Had a consolidation. We broke down. We're sitting here at 32.50. I think that's your level for this week. A break below points towards 30.5, and then a break there would point down towards 27.5. And you can see this little value area built out here, and this 30.5 level corresponds really well to the pre-pandemic high. So another instance of a round trip back to the pre-pandemic highs, and then a break of 30.50 would point down to a lower level towards 27.5. Industrials had the consolidation, we had the breakdown, we had a back touch of the 40-week moving average, a back touch of the range, and that is something you very often see. A breakdown, revisit the scene of the crime where the breakdown occurred, back here at 98, and then proceed back down. So I think it's pretty clear on the chart. I would key off of 90 with a first target. Here you had some support at, let's call it 84, and then your pre-pandemic high was back at 80. So I think there's if this breaks down, I would assume we would come back to the 80 for a test of the pre-pandemic high. So there's going to be probably $10 worth of opportunity there. Staples have held up pretty well. I would key off of 70 if you're interested in this particular sector. You've got a very large volume over price bar here that lines up with 70. I think if you break 70, you're going to go down to 67, and then that is a big level, because below 67 you could come down another $5-6 down to 61. Now I do think something like Staples is going to outperform on a relative basis. So for instance, if the market's down 3%, maybe Staples are down 2%. That's relative outperformance. Just remember, though, that just because something's outperforming on a relative basis, you could still be losing money. So I wouldn't expect this one to see as much downside as the others, but you're still welcome to play it if that's something that you want to get into. XLV, top of the box, bottom of the box, fake breakout, re-enter the range, bottom of the box, fake breakout, re-enter the range, bottom of the box. If you can work into your emerging technical analysis cues, these patterns repeat over and over and over again, and that's what's going to make them so powerful to you in your trading. You know, a breakout above the range and then you re-enter that range, your target is automatically the bottom of the box. So here we are again. I would key off a 124, a move below 124 would open up $11 of downside, which takes you down to 113. There is a level here at 115, 115 and a half. You see that there was resistance and support along that line of 115 and a half, right in that area. That would be my first target. And then I don't have it marked here, but my second target would be 102.50, which is basically near the pre-pandemic high. So the most important thing on XLV is a break and hold below 124. So I would have that highlighted. And I think it's also important to point out that, remember, on a weekly candle, it's not confirmed till the end of the week. So, you know, that's Friday. So you'll have to decide how you want to play that. So, for instance, say today we close at pick a number, 121. We close down here today at 121. You'll have to decide, you know, do you want to get involved right on this break, or do you want to wait till this week's weekly candle closes? Because what could easily happen is, you know, we take a deep look below and then rally into the end of the week, and then you're right back up to 124. So just remember how the weekly candles work. And if you want to drill down, you will certainly see that line at 124 on your daily chart. So if you want to trade it more actively, I would certainly go down to the daily chart or even the 60-minute chart if you prefer to get the micro levels on these particular ETFs. XLY, this is your proxy for Amazon and Tesla, two largest components. I think they represent over 40% of this index. I think your level here, you can see the prior lows at 140. If you break 140, I think you're going to come down to 130 relatively quickly. Why? Pre-pandemic high right here at 130. And then if we go gonzo bear and these pre-pandemic highs do not hold, then that opens up a ton of downside. So one of the points that I want to keep drilling down to you is where's the next opportunity, and stay very, very objective. Stay to your risk management. But my point is, if we go gonzo bear, there's still, we're just getting started if there's a gonzo bear, is what my point is. You can see that on a lot of the charts, the weekly breakdown has not even happened yet. So you can't really have a gonzo bear market unless, these support levels break and we plumb lower levels. So don't get totally frustrated and despondent. If we break these levels, you got to be looking to the downside and looking where next support is, etc., to see where some stability may come into the markets. So I'm not going to go over the REITs and the utilities. You can do those on your own, more or less kind of specialty type ETFs. You'll find the same type levels on those charts. So let's wrap it up there. Please highlight and alarm those levels in your charts. And this is going to be especially important to you long-term type swing traders. You get a break on a weekly chart. That's a place where you can, take your position and maybe look out to July, August, September, get your position. And as long as you're not stopped out, you just let it grind lower through the summer, and just hold fast in your position unless and until, we hit support or you get stopped out. If you hit support, you can roll down, make a trip to the bank, and, hold your position, but at the same time, de-risk your position on any kind of a bounce or anything you can get out, and then look to redeploy on another bear flag or something like that. So just some ideas for you. I hope it helps. Take the trouble to alarm those levels in your system. That way you won't be caught off guard on a breakdown, and you'll be sure to catch it. So if you're new to the channel, please hit the subscribe button, the alarm bell. A lot more coming your way. Jump over in the show notes. There's a link to the blog site where you can add your email address. It takes 15 seconds. You'll get all my analysis morning, noon, or night. And it's very convenient. You'll get that right in your email box. And you'll also get an invitation to our trading room. A lot of people, even if they can't participate on an real-time basis, find value scrolling through the comments and the trade ideas in the room. Maybe that'll spur an idea for your own trading. So we'd love to have you there as well. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.